Hey everybody.
Sean and Kelly here, Price and Price Group of Sampson Properties, and what are we talking about?
We have an urgent thing to talk about,
Yes.
and it is the fact that the interest rate is not the loan factor in your it is a loan factor in your mortgage loan, but it is not the sole or only factor in your mortgage loan.
That's right. So let's dive into this. So here we go.
Okay, so with rates hovering around 6% right here in Virginia, which is like a whole percent lower than it was January this time.
Yeah.
No, not this time. This year.
Yes.
January, buyers are starting to compare lenders, and that's where we have the big question of what's the difference between the interest rate and the APR.
Yeah. And as we're about to dive into this, just a super quick tangent.
Yeah.
When you're looking for a lender, there are a lot of other factors outside of what your rate's going to be and the cost of the loan. That's very important. We've done another video on that. We can jump into that at another time. Okay.
Yes. This is just that rate and APR question.
That's right. And the reason we're bringing this up is because lenders will give you these flashy low rates, low interest rates. That's right. But what is the true cost of the loan? So that's what we're diving into here.
Yes. So like I was saying, you might get a postcard in the mail or see something on the news or whatever you're going to get. Interest rates are 5.5%, right? Yep. That's not the whole story. Like, what is the cost of the loan? And who even gets that? They don't know your credit score. They don't know your house. They don't know if you're in a condo. They don't know what county you're in. Yeah. Well, I guess they do if it's a mailer. But you certainly don't know it if you're hearing it on the radio.
And they don't know where you're buying. You might get it in the mail, but it's like...
That's a fact, Jack.
Yeah, absolutely. Okay. So we're going to talk about interest rate versus APR. To determine like what the actual cost of the loan is. And we actually had a buyer asking us these questions. That's what caused this video to come into play.
Yes.
So it's really important to understand what that difference is.
The best way I remember it is your interest rate is the cost of the money, and your APR is the cost of the entire loan.
Right.
Yeah, it's the whole package deal.
Yeah. So the APR covers things like if you're buying points or lender fees or some closing costs. Right. It's the cost specifically of that loan. You're right. It's just the interest and the total expense of it.
Yeah, the interest is like just on the actual loan amount, and the APR is on everything. Yeah. Annualized.
As we were preparing for this, the thought came to mind. So remember when we bought my car, the one I just bought? Yeah. And we were out and we were test driving another car, and then the dealer pulls up and he's like, "What about that car? It's right in y'all's budget." It was like $18,000. And I'm like,
we do not spend much money on cars.
I was so excited. It's only $18,000. But when we walked out the door, it was the loan was for $28,000. Right. Yeah. Because that wasn't the cost of the car. Right. Was $18,000.
I know, and that was so weird because usually we just pay cash for cars.
I know. We had that.
Why did we do that?
We just bought 2 kids' cars, so we had to. Yeah. But anyway, so it's the APR is like once you add in all of those extra fees that are hidden when you go buy a car, just put that like
lender fees, closing costs. I think you went through all that, right?
I did. You're looking at the APR, it's going to tell you the truth about a loan because just because a loan has a lower rate, but if it has higher fees, your APR may actually be higher than a loan with higher rate and lower fees. So it allows you to compare apples to apples to decide what is the best opportunity for you.
Especially when you're looking at loan comparisons from your different lenders. So the loan disclosure, like the big shebang, it is uniform, and they all have to be the same. But that's not what everyone will give you at the outset. And they call fees differently, and the forms look different, and all of that. So
and they'll split the fees up into different categories. And
And I'm a licensed loan officer, and when I compare these for our buyers, it takes time. Yeah. When it's not the actual loan estimate, it takes me time to be like, okay, these people are calling this, and then I have to kind of decipher it and put it all in a form that our buyers can understand, because it can get really, really tricky and confusing. And they do that on purpose, right?
Yeah. So the basic summary here, is when you're looking at a loan, you don't want to get caught off guard or taken in or sucked in by the pretty rate. You want to compare loans side by side, and you want to compare that APR because that is giving you the actual cost.
There's so many other fees involved that are going to be on there that factor into that APR. So whenever you just say closing costs, it's like, oh yeah, closing costs. Yeah. Okay, lender fees. But it's like there are all these other little things that are nickeled and dimed that do add up.
Yeah. So so when you are comparing loans, would you completely agree, right? It's just you have to look at that APR.
You have to look at the APR. Yeah. And when you look at the APR, the interest rate is only a part of that. So when you want to go back to a lender and say, hey, how can we work on this? Don't talk to them about the rate, right?
Yeah. Talk to
them about all the other stuff.
Yes.
Like, can they give
That's a good point.
can they give you a lender credit, right? For the points to buy down? Can they waive the appraisal? You know, some properties you can get a waiver. Yeah. Go down on the credit report fee. All kinds of stuff that you can at least ask. I mean, I think it doesn't hurt to ask.
That's a very, very good point. So you have more flexibility in there because that's the lender specific.
Right.
Yeah, I like that.
Yeah.
Okay. So if you have any questions about this, or if you're in a situation where you're comparing loans, whether it's for
I love
refinance,
comparing loans.
give us a call. Like Kelly said, she is a licensed loan officer. She does not practice lending. She maintains that license so she can give good, objective comparison values.
Stay in the know, man.
That's right. That's right. And then you will know that she's giving you just an objective opinion because she's not trying to get your loan. So it's just a good. I
love doing it.
Yeah, that's awesome. That's awesome. So give us a call.
You hate them.
I do. I cannot stand working on loans. But now. It is time for the
Real Talk Pop Quiz.
That's right. That's right.
What?
You get to read it. So we're going to see if we taught you well, and we're going to see if you were listening.
I feel like we just rambled. So good luck to you guys. Okay, what's included in APR that is not included in your interest rate? Okay, that's what's included in the APR.
Yep. Not
included in your interest rate. A, lender fees. B, points. I'm saying B. C. C, some closing costs, and D, all of the above. This is D, right?
Yeah, that's D. Yep.
A, B,
C or D.
D.
That's F. This is F. All right. So drop your answer in the comments, and we will eventually put the correct answer in the comments, but we'll also go over it on next week's market report. Yeah.
Yeah. Okay. It's so easy. Like.
Yep.
Who doesn't know this?
All right. If you need us for anything, give us a call at
703-783-2143.
That's right. All right. We'll see you guys on next week's market report.
Oh, bye and happy Halloween.
Yes. Okay.
Hey, everybody.
Sean and Kelly here, Price and Price Group of Sampson Properties. And what time is it?
It's time for our weekly market snapshot.
Yay! That's right, What's happened in the last 7 days in the Northern Virginia real estate market in under 5 minutes? And I think we're going to get it in under 5 minutes.
We are going to get it. So let's talk about that top graph.
All right, here we go. So let's dive into this. You ready?
I'm ready.
All right, let's go.
Okay, so the top graph, we have two squiggly lines. The black one, that reflects the buyer activity. That's how many houses have gone under contract in Northern Virginia in the last 7 days. The teal line is the seller's listings, right? That's how many listings have come on the market in the last 7 days in Fairfax County.
That's right. That's right. All right. So what is happening, and what information can you take from this to take out this weekend and know as you're looking at properties?
And it's a long weekend too.
It is a long weekend
for us here. So I'm hoping, like, it looks like buyers have kind of picked up a little bit.
They have. So that I'm glad you brought this up. So a long weekend like this, from the buyer perspective, it's the perfect time for you to go look at properties because a lot of buyers are traveling.
Yes.
So it's already a little bit more of a fair market, but this would give you even more of an advantage.
Yes.
So if you're in town, go look at properties.
The weather is going to be beautiful. We are here for you. Go do it now while other people are, I don't know if they're at the beach right now or a lake house. I don't know. What do you guys do right now?
I have no idea. I can tell you a whole story about it.
It's too cold to go to the beaches around here.
Well, when we were in Florida and I was at a seminar, remember?
Yeah,
and
those people were down there.
It was like November and they were swimming in the pool. And I'm like, what are you guys doing? It's like 60. It's cold. And they're like, this is perfect.
But remember when they were so dumb and they would be like, where are you from? And we're like, here.
Okay. Black line. So you can see buyer activity is certainly on a downward trend, as it always is this time of year. But we did have a spike last week. We are seeing the interest rates. They've dropped from about 6.5 down to 6.1 to 3. So there's been a little bit of a drop. It's not going to drop again because the Feds did their rate drop at the beginning of this week. The rates already dropped prior to that.
Yeah, so mortgage lenders, again, they anticipate what the Feds are going to do, and oftentimes they beat them to it.
Okay, so it's an opportunity for you to get out there and buy right now. Inventory is on a steady decline, which it will continue, but here's what's interesting. If you look at this rate of decline versus last year's rate of decline, this year's it's not as steep. But the buyer activity is still pretty active. Now it's lower than it was last year, and inventory is a little bit higher, so that's why the buyers have a more favorable market this year.
I'm actually kind of surprised that it picked up the way it did with the shutdown.
I am too. Yeah, this week.
I expected it to kind of
I think
at least plateau. I certainly didn't expect it to pick up.
Yeah, I think what happened was these 2 weeks here, the rates dropped pretty significantly. They went down to like 6.1, 6.2. And so it probably took about 2 weeks for them to get the loans and come in here.
Okay.
So this right here, this coming week is probably going to drop again because of the 4-day weekend and all that. So right now, if you go down to the buyer's market versus the seller's market, you can see we did dip up into a little bit of a seller's market this past week. But I expect us again to come back to this neutral market.
Yeah, look at us. I mean, it's kind of staying at that neutral line, which is beautiful.
It is.
For everyone. It's healthy and balanced.
This is healthy and balanced, which means that sellers, you're not going to get 50 offers on your property, but you're still able to capture all that equity that built over the last several years. And buyers, you're able to get in there without competition and actually take some time and look at properties, and you have choices. So it's a good market.
Talk strategy on both sides. I mean, it's good for everybody right now.
That's right.
Really good.
That's right. So give us a call if you'd like us to sit down and talk about your situation. We'd be happy to do that. 703-783.
2143.
That's right. All right. We'll see you guys next week.
Bye.